The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Can we get a quick sound check? Can you type something in the chat so we know you can hear me, or we just want to make sure the sound is all good? Okay, cool. Okay, thank you guys. So this is Michael Camo from T3 Live, and I am going to introduce you to Sami Abusaad, who many of you know. So Sami has not done a webinar in a while, so we're really excited to host you guys with 3 steps to a successful trade, which is a preview of the Trading in the Pristine Method course, which is being taught live this weekend. Now, this isn't one of those like sales pitches, sort of dressed up as education. Sami's actually going to teach you step by step, and he's coming on in just a minute. So please read the disclosures. Everything here is for educational purposes only. Trading is risky. We are sure you all know this. So let me tell you a little bit about Sami. So Sami is T3 Live's Director of Education. He's been a professional trader since 2007. He runs our Strategic Day Trader Room, the Strategic Swing Trader newsletter. He's run our private mentorship program, and he created the Earnings Engine program. And the reason I love working with Sami is because not only is he a world-class trader, he's also an amazing teacher, and he can actually break down complex topics into step-by-step instructions. So everything just makes sense. And we think you're going to see that tonight, because I think of a lot of trading education as more like Play-Doh. It's almost like people just throw together random things. With Sami, it's more like Legos, where things just snap together, they make sense in a total system. So I'm not going to put it off any longer. So it's at 4:32. So Sami, are you here?
I sure am.
Okay, okay. Welcome, Sami. Thank you for coming on with us, Sami. I'm gonna pass control over to you now.
Sounds great. Thanks, Mike. I don't know which screen I'm showing.
We can see the slides. I see the start of my trading journey. That slide.
Perfect. Great. So welcome, everybody. I'm glad to have you all with me. I'm going to jump right in. Basically, just a little bit about myself. I started trading. My interest in trading began in 2005, after actually saving $20,000 from an accounting job that I had at the time and not knowing what to do with it. So I read about Warren Buffett and found out that the second richest man in the world made all his money from investing. I read about a 21-year-old kid in New York who had made $1 million the year before. And I thought, you know, it's very competitive. So I thought if he can do it, not only could I do it too, I would blow him out of the water. So I decided, you know, that's what I wanted to do. I opened a trading account, and out of the 20 that I had in my bank account, I funded it with 16. I left 4,000 for living expenses, rent and whatnot, right? In 6 months, I made $10,000 from 16. Now my account was at 26. 6 months later, and I was up at almost $50,000, not quite 50, just under 50. And I did that by playing swing long in at the time, a bullish market. And then came the brilliant idea from my PhD brother, who was just as amazed at my results as I was. He told me, if you can make this kind of money from buy and hold, by buying and holding, imagine how much more you can make through investing or trading actively. He was actually referring to the list of stocks on the top gainers, top losers. And of course, I listened to his advice. He's the brainiac in the family. Started trading actively every morning. And then within a few months, I believe 2 or 3 only, I lost everything that I made, right? What do you think happened? I lost everything that I had made and plus $15,000 more. Of course, that's when I realized that I had gotten lucky and that I didn't really know as much as I thought I knew. And so I started scouring the internet for trading resources. I came across a website called Zax.com. You can look it up. It still exists today. It's a financial website similar to Yahoo Finance or Google Finance. Now, at the time, Zax.com was running a 1-year trading challenge, and the winner of that challenge received a $100,000 job offer. So I participated, and of course, I didn't win. Actually, I did poorly, but I did receive something better than winning the challenge. I became friends with the #1 trader in that contest. He had turned $100,000 into $2 million in less than a year. And he told me that he had been a full-time trader for the last 15 years and that he learned it all from a small company called Pristine. I had never heard of such a company. So he encouraged me to visit the website, take their classes, which I did. I took the TPM class and every other class that they offered. And of course, the rest is history. Okay. That's how my trading journey started. Now, why am I showing you this? Well, to tell you a little bit about myself, maybe, but also really to tell you that, making it and not making it, like, there's nothing special about me. Trust me on this. Ask my girlfriend. She will tell you the same. There's nothing special about it. I don't have any special talents or skills, or I do have quite a bit of determination. I've always been driven, even as a kid. I learned to be competitive and driven by playing sports, and I took trading seriously. I was really serious about it. I didn't want to do it for the excitement that sometimes it brings, or the suspense, or the things that some people are that it attracts some people too. So the ones that have sometimes gambling, compulsive gamblers, or they're attracted to trading. But that wasn't me. I was really serious about it. That's it. That's all. But I don't have any special, if I can do it, you definitely can. I believe in my heart of hearts that everyone can do it. Not everyone will do it, but anyone can become successful in trading. Now, I do want to teach you something that is near and dear, something that's like, this lesson is really important to me, and I use what I'm about to teach you in my everyday trading. There are 7,553 ways to lose money day trading. I counted them, 7,553. Here's my absolute best advice on how not to do it, okay? On how not to lose, to be one of the, to have one of those methods that loses money. Focus on plays that have a catalyst driving the price of the stock. Again, focus on plays, on trades that have a catalyst driving the price of the stock. Don't waste your time trading stocks that are not moving or stocks that lack momentum. Now, the catalyst is what creates momentum. Okay, so you don't even have to figure out, because that's another issue. How can you tell whether a stock has momentum or not? How can you tell? Well, if it has a catalyst, you're 50% there. So focus on stocks that have a catalyst. In other words, trade what I call strategies, not just patterns. Okay, now you might say, what is a strategy? Now, actually, what is a pattern? A pattern is, just go to Google, type trading patterns, top trading patterns, and a bunch of pictures will come up. A bunch of charts and patterns will come up. That's what I call, those are patterns. That's not what I trade. What I trade is what I call strategies. Now, what is a strategy? Trading strategies simply means marrying a macro event to a micro pattern. So I do use a lot of these similar patterns that you can just Google, that you can look up on the internet, but I only do them if they have a macro event, which is the catalyst. So give me a catalyst and give me a high probability trading pattern, then that's something I would be interested in. That's what a strategy is. There are several catalysts that you can look for. The easiest and most prevalent that happens every single day, whether you're in earnings season or not, are gapping stocks, stocks that gap. I put together a list of gappers that I send to the room every single day, and sometimes it's well over 100 gaps, well over 100 to pick from. That gives you an edge, gives you an incredible edge. You can look for stocks that are showing extreme relative strength. You may not know why. Maybe they have a new CEO, they launched a new product. Who cares? I don't even look up the news. I truly don't. If it's showing extreme relative strength means extreme relative strength to the market, right? It's not just stronger than other stocks. It's showing it does, it's not reacting to any kind of bearish move in the market. That's what extreme relative strength means. If it's showing failure, if it has a failure pattern, especially if that failure pattern is on the daily chart, right? Because remember, I'm looking for a catalyst on a macro scale, on a macro time frame, which is daily, weekly, monthly, larger time frames. And I'm looking for a pattern on the micro, on the intraday time frames. So 1 minute, 2 minutes, 5 minutes, 15. Those are the 4 intraday time frames that I use. Some people use the 10 minute, the 3 minute. I don't, but you can. Some people use the 30 minute. I use the hourly, but I don't really trade off of the hourly. I just use it as a larger time frame to establish a bias, to kind of give me a good idea of like a big picture of what's happening with the stock. So again, gapping stocks, stocks that are showing extreme relative strength, stocks that are displaying failure patterns on the daily charts, or stocks that have wide range bars clearing significant resistance or support if the stock is breaking down. Those usually, and there's more, those are just 4. Those usually give you a good start. Like that's the catalyst that I look for. All right. Now, second step is find a high probability pattern. Remember, there's 3 steps. First step is find the catalyst. Then find a high probability pattern. You can do whatever patterns you want. I'll show you what patterns I look for, but if you're familiar with certain patterns that you really like to do, then go for it. In the morning, in the early part of the day, between 9:30 to 10:30, I'm looking at the 1 minute, 2 minute, or 5 minute time frame. That's it. I'm not looking at the 15. I'm not looking at the 30 because it's early in the day. Mostly, actually, between 9:30 to 10, I'm looking at the 1 minute. Between 10 to 10:30, I'm looking at the 2 minutes, and then 10:30 to 11:30, I'm looking at the 5. But it's not set in stone. So just keep in mind that in the morning, you're using the small time frames. Late morning, early morning, small time frames. Late morning, 10:30 to 12 o'clock, use the 5, 10, or 15. For me, mostly, I don't use the 10, so it's the 5 or the 15. But if you use the 10, that's fine too. After 12 noon, I focus exclusively on the 15 personally. But some people, like I said, like to use the 30 minutes. Then go for it. Okay? So find the catalyst, find the stock that has a catalyst, and drill down to the smaller time frames to see if you can find a high probability pattern. And any pattern applies. I like to do pullbacks, breakouts, continuation patterns, mostly the 1, 2, 3 pattern, or reversal setups, climactic buy setups, climactic sell setups. Sometimes I will also do failure patterns such as the W pattern or the M pattern. Those are failure patterns, but the vast majority of my plays are going to be either pullbacks, breakouts, or 1, 2, 3 patterns. Those make up probably 85% of the setups that I take, those 3. If you think about it, stocks can only correct through price by pulling back or through time by going sideways. So in reality, you can only really do whatever pattern that you use. It's going to be just a subset of either a correction through time or correction through price. That's it. All right, so those are the patterns that I use. Now, the third step is time your trade with the market. Okay, time your trades as follows. If the market is bearish, look for weak stocks basing at the low of the day, or that have a counter rally to resistance or the declining 20. That's okay too. So if the market is bearish, look for weak stocks at the low of the day, basing hopefully at the low of the day. If not, if they're not basing, maybe they're on a counter rally move to the declining 20 MA on whatever time frame you found the pattern. Okay, don't get confused, on whatever time frame that where you found the pattern. Now, if the market is bearish but is way oversold, it's down a lot, then what you could look for is extreme relative strength. Stocks that stayed at the high of the day. The market dropped really hard, it's down 2%, really extended, maybe is ready for a bounce, and the stock that you're looking at stayed at the high of the day. That's called extreme relative strength. It's not impacted by the market at all. Or you can also look to play things that are down just like the market, but even more so. So they're going totally climactic. So you can look for extreme relative strength or climactic buy setups. What people do a lot, and this is what I also started, when I started trading, that's what I did too. When the market was bearish, I focused on the really bullish stocks. And that's not the right thing to do. You want to play in the same direction, in the direction of the market, in the same direction as the market, right? You don't want to be looking to play long when the market is bearish. 9 out of 10 times, you want to be looking to play short when the market is bearish. And you want to be looking to play long when the market is bullish. Only when the market gets oversold can you look to go against it. Can you look to, play the reversal? Does that make sense? But the vast majority of the time, don't be looking to play long in a bearish market. Similarly, don't be looking to play short in a bullish market. So if the market is bullish, look for strong stocks basing at the high of the day, or on a pullback to support / the rising 20 MA. If the market is bullish but way overbought, like this, don't abuse this. Don't go against the market unless you know how to tell. You can easily tell that the market is really overbought. If so, then you can look for extreme relative weakness. The market is up 2-3%, and you found a stock that's at the low of the day, that has a catalyst on the daily chart and has a wonderful intraday pattern that you know and love, that you're completely familiar with, that you like to do every time you find it. Okay, so you can look for extreme relative weakness or something that went totally berserk, went climactic to the upside. That's how you time your trades with the market. Now, what if the market is sideways? Well, then look to go long bullish stocks when the market is at the bottom of the range, and short bear stocks when the market is at the top of the range. I rarely have to deal with this, market sideways markets. I mean, it happens, but most of the time it's either a really bullish market or really bearish market that I have to worry about timing my trade with. Does that make sense? When the market is sideways, you can, you don't have to wait for the bottom of the range to go long. It's ideal if there is a clear range. It's ideal. Or the top of the range to go short. That's ideal. But sometimes if the market is sideways, then it's just really choppy, in which case you can play long or short. Doesn't really matter. Now, one thing that I utilize in my trading like crazy, I do it with every trade that I take, is I use amplifiers, enhancers, things that make the setup even better. Like when you go to Google, as I told you earlier, and you look up a breakout or a pullback, do you know what the different things that make that setup even better than just every other breakout out there or every other pullback out there? Yes, there are certain amplifiers. Actually, there's 10 of them that I teach in the TPM class that make the setups better, right? So amplifiers are key to predicting market tops and bottoms, and they're key to picking out the best of the best when it comes to patterns. Here's an example of the process, right? Here's an example. Find a catalyst is the first step. So we can see that this is the daily chart breaking out. Okay, so that's the catalyst. If you have a pattern on the daily chart, and the pattern in this case is a breakout, that's a catalyst. Now I need to drill down to the intraday time frames and find the high probability pattern. I'm very familiar with the 1, 2, 3. I love this pattern. Okay, great, let's do it. I got a 1, 2, 3 setup right here, long over that top and tail bars high, stop under the red bars low. And the third step before I take the play is I want to make sure the market is also is bullish, right? And as you can see, the market here was doing its own breakout. So I got a catalyst on the daily, a pattern that I know and love on the intraday, and a bullish market that itself was breaking out. Very, very simple, very easy. Now, how many people follow this 3-step process? Not many, I'm sorry to say. Not a lot of people, because they get lost in the maze. I mean, they just get lost, right? And they don't slow down to make sure they have the process down. Here's another example where the stock was actually transitioning on the 60-minute chart. So this is called a transition C, or breaking down on the 60-minute with a void below. There's not clear air below, no support at all. That's the catalyst. The intraday pattern was a T3 breakdown. Notice how the stock dropped to the low of the day and based at the low of the day. So guess what's going to happen when the stock breaks low of the day? Oh yeah, it's going to drop. It actually didn't drop that much, but that's the second step, is find a pattern that you know and love. But make sure before you take it that the market is also in your, going in the direction that you're trying to play. The market is bearish, which it was. The market was pretty bearish. Okay. Now, here's another example. In this case, it was a gap, but the play happened the day after the gap. I normally don't play stocks the day after they gap, except when I like the gap and the stock didn't move much on the day of the gap. So as you can see on this day, the stock didn't actually, it broke out, was a nice gap over red bar from the 20 MA, beautiful, but it didn't go. Guess what? The next day is usually when it moves. So I like the catalyst on the daily chart. I like the gap. I look at the intraday and I see that it started the day off with 2 wide range green bars. That's really bullish. Love it. And then it pulled back. So I got a pullback here to the rising 20. That's beautiful. And I can see that the pullback was good on not just the 5-minute, but also the 15-minute. That's called multiple time frame alignment. That's a huge deal when there's multiple time frame alignment. When the stock actually is showing you a bullish pattern, if you're trying to play it long on across multiple time frames. The most important time frames to be in alignment with the pattern time frame, with the main time frame where you found the setup, is the 1 time frame larger, in this case the 15. Some people use the 10, then in that case it would be the 10, but I don't. So the 15, and the 1 time frame smaller, so the 2-minute or the 3-minute if you use the 3-minute. You see what I mean? So you want the time frames surrounding them that are close to the time frame where you found the pattern to be in alignment with it. And so in this case the 15 was perfect, and then another buy setup later on. So perfect. Okay. Now I'm going. So this whole lesson is taken out of the TPM class. Okay. And I'm going to be teaching the TPM class this weekend. It's a 2-day class. Okay. I want to show you the table of contents first. This is the table of contents for the TPM class that I'll be teaching this weekend. So the first chapter is on the simple art of trading review. Then a closer look at trends, transitional analysis, how stocks transition from stage 1 to from sideways stages to uptrends to downtrends. You see what I mean? Then we start to talk about the various strategies. We go over the pullback strategy and the counter rally and sell setup. So the T3 buy setup, T3 sell setup. Then, as I said, you know, anyone out there can find the pullback play, but can you find also the amplifiers that make it a lot better? You see what I mean? This is why scanners usually don't really work that well, because it's hard to program amplifiers. There's 10 of them that we teach that I teach in the TPM class. So it's hard to find those amplifiers. It's easy to find buy setups, but it's really hard to find amplifiers with those buy setups and make sure that it also has a catalyst on the daily chart and it's timed correctly with the market. So I'm all for automating your trading and having a scanner do the scanning for you, but it's hard unless you can program all these things at the same time, right? So we talk about the key strategies. We start off with the buy setup, sell setup, simple stuff, but we also add in the amplifiers that are applicable to stages 2 and 4. These are the uptrends and the downtrends. And then the amplifiers that are applicable to stages 1 and 3. These are the sideways stages, okay? And then we also talk about the amplifiers that occur in transitions when the stock is transitioning, okay? Now, you might not know what the word transitioning means. I'll show you this weekend what I mean. And then we talk about the second strategy, which is the breakout and breakdown, okay? Then we talk about the 1, 2, 3 pattern. When I say we talk about, I mean, I give you step-by-step instructions. You know, place your order here, put your entry order, place your stop right here, manage it this way, and then this is where your target is for this pattern or that pattern or the other pattern. I mean, it is pretty precise stuff. It's not like, oh, here's the pattern, good luck. Nope, I give you the exact entry for every pattern that I show you, that we go over. Then I also go over the climactic setup, climactic buy setup, climactic sell setup. I review it. I go over the 5 criteria. It's actually 4 plus 1 optional for the climactic plays. These are the reversal plays. This is the only time or the only way I go against the trend is when the stock or the market goes climactic. Okay. Then we talk about money management for the trade and for the account, because without money management, none of this matters, right? And then we do a section on putting it all together. So it's like a summary of everything that the steps that need to be followed on every. So if we were to just give you if I were to give you a preview of what the first chapter is, I'm actually not going to do the whole chapter because it involves learning about master trader key number 1, master trader key number 2, and then combining the 2 master trader keys. Those are like, that's the foundational stuff, but that takes time. That would take me a couple hours probably. So I'm just going to show you the very first section of the first chapter in the TPM class to just show you what it looks like, okay, and the quality of the stuff. So the first section is about candlesticks and why we use candlesticks and how to use candlesticks. So just the first slide is, you know, we talk about why we use candlesticks as opposed to bar charts, because candlesticks give you the story of what really happened. Candlesticks are all about comparing the close of that bar, of that candle, compared to the open. And if a stock closes above where it opened, then it's bullish, obviously. If you bought that stock, then you made money, right? If it closed, if you bought it at the open and it closed above where it opened. Whereas Western bar charts, they compare the close of the current candle that we're looking at to the prior candle. It doesn't give you that same story, that same narrative. Here's what a candle looks like. There are 5 reference points to understand when it comes to candlesticks. 5. The open is at the bottom of that green. If the candle is color coded green, it means that it closed higher than it opened. So the open is at the bottom of that green. The close is at the top of that green. And then obviously the high is the highest point in that candle. The low is the lowest point. And what's the 5th thing? I said there's 5 reference points. That's 4. right? The open, the close, the high, and the low. What's the fifth? It's the body of the candle, right? The bigger the body, the more bullish it is, okay? And when the stock closes, when the candle closes higher than where it opened, it is said that bulls won the battle, because every candle is a battle between buyers and sellers. Now, if it's color coded red, it means the open was at the top of that red, the close was at the bottom of the red, and then obviously the low and the high are the same, whether it's a a green candle, red candle, or any color you use. And so if the stock closed lower than where it opened, it means the sellers were more aggressive. You might have heard people say there were more sellers than buyers. That's not possible to have more sellers than buyers. For every seller, there's a buyer. But it means the sellers were the ones that were more aggressive, okay? That pursued, that were just dumping shares at any price or whatever, right? So that's what that means. Then we go over the only 12 candles that you can possibly get. There are no other candles than these. And I explain how each one of them forms and what it means. We said if a candle closes higher than where it opened, that means the bulls won. It means it's a bullish candle, but not necessarily always the case. For example, the second candle over here, notice how it opened here. How do I know it opened here? Because it's a green candle. We said the open is at the bottom of the green, and it closed over here. But what about this big tail? How did it form? This tail formed initially. The stock rallied all the way up there, but before the candle had finished forming, it had come all the way back down to close in the bottom third. That's pretty bearish. So initially the buyers were in total control, and then they lost that control, and the sellers showed up and forced prices lower to close in the bottom third. So even though if you were in the stock before the candle had formed or bought it at the open, this could be a daily candle, 1 minute candle. This applies to every time frame. Doesn't not really matter at all. If you bought it, you would have made money, but the message that the candle was telling us is this is bearish. What happened was bearish, even though again in theory it's bullish because it closed higher than where it opened. Does that make sense? So similarly, this bottoming tail bar number 9, candle number 9, that's actually a bullish candle, even though it closed below where it opened at. See what I mean? So we go over every candle and we talk about how it forms and what it means. Like, what does this candle mean? Number 10 and number 5. And which one is bullish, which one is bearish? Doesn't matter that each candle has a small body. What does it actually mean? You know what I call this candle? Anybody know? This is the I don't see any correct answers. Okay, I'm gonna leave it a secret until the weekend, and we'll talk about it on the weekend. Sometimes the candle doesn't have a body at all. It doesn't have any green or any red at all. That's because the open and the close were exactly at the same price. So it's just black, right? But it's far from this candle at the bottom, number 12, that's far from being bullish. That's really, really bearish. Number 11, that's a bottoming tail candle. That's really bullish actually, even though it closed exactly where it opened at. So in theory, it shouldn't be. Then we talk about narrow body bars, right? And what they mean. Narrow range bars, narrow body bars are excellent reversal signals if they form after a period of selling or after a period of rallying. They're excellent reversal bars. That's what they actually mean, right? Then we discuss that. Then we talk about wide range bars. Wide range bars that form after a period of sideways action ignite. They start the trend in that direction. So you don't want to be betting against them. You want to be actually going with them. If the wide range bar happens to form after a period of selling, that signals the end of the move, exhaustion. Does that make sense? So we talk about wide range bars in detail. I'm just going over them quickly. I'm not teaching much. We talk about topping tail bars, what they mean, right? Does the color matter, whether it's green or red? Does it? What about the size of the candle? Does that matter? What about the size of the topping tail? Not every candle that has a topping tail is called a topping tail bar. Okay, like most candles have a little bit of tailage on either side, right? So those are not bottoming tail or topping tail candles. This is a topping tail candle. That was a topping tail candle. The other tails are not significant at all. Topping tail candles, you know what that means? It means the buyers got rejected. Higher prices were rejected. So distribution occurred. So the buyers were in control and then they got slammed. That's actually quite bearish. Okay, especially if the color changes, flips from being a really big green candle to a totally red candle, right? That's a great reversal signal. Now, topping tail and bottoming tail candles, there's a way to make them even more bearish or more bullish. There's actually a way to, there's certain types of bottoming tail, topping tail candles that make the setup even that much better, okay? And those are called range expansion candles. So range expansion, REBT, range expansion bottoming tails, range expansion topping tails, RETT. Those are the single most bullish bearish candles in existence. Okay. Then we talk about again, we talked about how wide range bars can end a move, wide range bars can ignite a move. This is exactly the same usage, the same way we use volume. If volume happens to form, if you get a pickup in volume at the beginning of a move, if you get a spike in volume while the stock is going sideways and it starts to break down, that's actually professional selling. So you want to hop on board and short that stock, okay? But if you get a spike in volume at the end of a move after multiple red bars in a row and then a wide range bar, that's actually exhaustion volume. That's people panicking out of the stock. It means it's very close to the bottom. You see what I mean? All right. So wide range bars ignite, wide range bars end. And we talk about reversals, figuring out the level of potency. How can you tell whether a reversal is potent or not? There are certain things that we look at, such as the size of the candle, the number of candles, and the level of retracement. Okay, so for example, that was pretty potent. This one wasn't very potent because we didn't retrace much. Also, the candle was small compared to the initial candle. This is very potent. It gapped down and then it retraced not just the entire candle, but another, this much more. So that's like 150% retracement. That's not very potent because it gapped up, but got sold and retraced about like 1/3 of the candle, not even 1/3. So we discuss the reversals. We talk about pivots, how they form, because pivots is how trends form. So we talk about low pivots, which is, what's a low pivot? A low pivot is when the buyers take back the control from the sellers. The sellers were in control, and then now the buyers took back the control. And then a high pivot is bearish because it gives you a reference point when the buyers lost the control to the sellers. So it becomes a focal area of resistance. But there's different types of pivots. Not all pivots are created equal, not at all, right? There's rounding tops, there's square tops, and rounding bottoms, square bottoms. There's bottoms with shakeouts, there's V pivots. So there's all kinds of pivots. This is I'm not trying to even teach very much. I'm just showing you what it is that we go over, that you learn in the TPM class. And then, as I said, pivots create trends. If you have consecutive higher lows, 1 through 6, those are pivot lows or low pivots. Consecutive higher highs, that's letters A through D. That's what creates an uptrend. So an uptrend is defined as higher lows and higher highs. Now, we also have other ways that we use to define the trend, not just higher highs, higher lows, but that's the most important part of the trend actually. Does it have consecutive higher highs, consecutive higher lows? What about the 20? What about the railroad tracks between the 20 and the 40? So there's various things that goes into analyzing a trend, but the first one is trend analysis. I mean, is the pivot analysis. Okay, and then the same applies for a downtrend. A downtrend, you get a downtrend when you have lower highs and lower lows. The highs are A through F. The lows are 1 through 6, 7 actually. Those are all consecutive lower lows. That's what creates a downtrend. If you're looking at a monthly chart, this kind of trend can last for years. I'm not even exaggerating, years. And you're able to take advantage of it as it drops over multiple years or as it goes up multiple years. Did you know that a lot of stocks, I would say the vast majority of stocks, like maybe 75%, 85% of stocks between 2007, 8, when the market bottomed. The market bottomed in November of 2008 and then double bottomed, retested the prior low in March of 2009. So the Qs made a higher low. The Qs is the Nasdaq. The SPY made a lower low. So retested in March of 2009, actually March 9th, 2009. So between March 9th, 2009 and I would say November 2021, so March 9th, November to November 2021, the vast majority of stocks were in a monthly uptrend, as well as the market. It did not break the monthly uptrend up until, I don't know, not even November of 2021. It happened in 2022, last year. So that's how you build wealth, is playing these long-term trends on the larger time frames. Okay. All right. And then we talk about also when the pivots are not consecutively higher or consecutively lower, when they are about the same level, when that's sideways trends. How do you take advantage of it? Can you short every pivot high or pivot low? Can you buy every pivot low? Not really. You can't. So and that's what forms a sideways trend. So again, I'm just showing you like the first section of the first chapter of the TPM class, and I hope you're impressed. I've been teaching this since 2010, so 13 years. Yeah, 13 years. I started in the summer of 2010 teaching this class. I've updated it numerous times over the years, but every time I teach it, I get really excited and I just love it. I enjoy it so much because it's such a logical system it gives you a logical, rational approach to the market. This is what I loved about the Pristine method when I learned it, when Scott Redler learned it also. It makes sense. Like the logic is intrinsically valid. Whereas if you go, if you check out other schools, they might say, buy the stock every time it crosses, if the 20 MA crosses over the 50 MA, the 50 period moving average crosses over the 200. Why? I don't know. It just works. Buy it. I can never trade a methodology that doesn't make sense to me, that I don't really understand. Because you know what? Sure, I'll buy it on this stock, but then on the next stock, I'm not going to have the confidence to do it because I don't understand the logic behind it. But with this methodology that I learned a long time ago, that I now teach, it makes sense. Like whichever way, however way you look at it, the logic, as I said, is intrinsically valid and it's rational, logical, objective, and it can be applied to every time on every stock. Can be applied to every stock on every time frame. I mean, what more can you ask? What more can you ask? You see what I mean? So anyways, I really, really hope that you join me this Saturday. I'm going to be teaching Saturday, Sunday. It's a 2-day class because I think you'll love it. I know you will, but you got to be serious about trading. If you're not serious, I think you'll probably get bored or something. I wouldn't do it if you're not serious about trading. But you know what? If you're not serious about trading, I wouldn't even trade because it's very, very hard to make money, I think, if you're not really into this. So if you're into it, you're committed, you're serious about it, you're passionate about it, then boy, go for it, because it's extremely rewarding. Extremely rewarding. I'm gonna pass. I hope you enjoyed this little presentation. I'll stick around, but I'm gonna pass the mic back to Mike. So go for it, Mike.
Okay, thank you, Sami, for an awesome lesson. So, what did you guys out there think? What did you think of Sami's lesson? Because he actually gave you a full preview of what you can learn this Saturday. And Steven just asked, can I have a link to the training sign-up? So I'm just going to send it out now. But we do have a special offer for you that is good tonight only, because we want to make it really easy for you guys to sign up. So again, the TPM class is this weekend, Saturday and Sunday. It includes full recording, so if you make it live, that's great. If you have to leave for a little bit, totally fine. You get the recordings, plus you get the course slides. Now, the regular price is $9.95, but if you sign up tonight, you save 50%. So it's just $495 for the best trading system on the planet. We think it's the foundation of Sami's career. Like he said, he's been using it since 2007. And it's what we recommend for anybody that wants to finally get on track, finally get confidence over their entries, their exits, and feel like they know what they're doing, because it's a system. It's not a bunch of random tactics. It's an entire system. So day one, we'll go over the candlesticks, trend analysis, transitional analysis, key strategies, trading amplifiers, plus Q&A. You can actually ask Sami anything you want. So this is a real top professional trader that's going to take you through the whole system, and he'll answer all of your questions. And day two, there'll be the breakout and breakdown strategies, the 1, 2, 3 strategies, climactic buy and sell setups, money management, putting everything together, and even more Q&A. So again, this is a rare opportunity to learn from a top pro trader everything you need to succeed step by step. So if you want to sign up, go to t3live.com/TPM. All the info is on the screen. I'm going to shoot the link out to you guys one more time. t3live.com/TPM. So Sami, are you still with us?
Absolutely.
Okay, so something struck me at the beginning of this call, and you basically divided people into two categories: those that can do it and those that will do it. So what's the difference? What sets the doers apart?
I mean, it's just the mental state of mind. I mean, it's just if you're really serious about it or not, if you're committed to it or not. If you are, I believe anyone can do this, because it's not rocket science. It's just two directions, up or down, long or short, green or red. That's it. So it's not very complicated, but you got to be committed to it and emotionally invested in it, because otherwise you'll just you'll get either bored when it's when it's slow, or you'll get you start gambling if it's you're not going your way, and you start doing crazy share size. So no, you can't do that. If you do it, then you'll wash out of the market.
Okay, so you took TPM. You sort of had this roller coaster at the beginning of your career, where you went from 16 to 50, then you went down 15. So what did TPM? Well, how did your trading change after you took TPM?
So I'll tell you what happened when I went from 16, and this is the, like some people on the internet will will come up with crazy wild stories, and they'll say, oh, I started trading with $2,000 and I drove up the account to $1 million in 6 months. That's not me. I'm telling you the absolute truth. I started with 16, went up to 50, and then back down to -15 by the end of the year. So the way it happened is, I don't want to like name any names, but I read a pretty popular candlestick book, or I actually read more than one, that says, that it teaches you how to read candlesticks. And I read those books and I thought, now I know, because the book explained what each candle means, and how some, candles together, candle formations, what they mean. And now I started to apply it to trading, thinking that that's really what it, as soon as I see this candle, then, oh, that means it's bullish, let's buy it. And so I started applying what I learned in a couple of books, but one of them is Steve Nison's book on candlesticks, and thinking that that's what trading was about, and it wasn't. It's not. It's about putting all the information together into a comprehensive system, which is what TPM actually taught me. It taught me a way to analyze multiple time frames, to analyze, to put together, to coordinate a lot of different variables. It's not just put your head in the sand and buy the stock anytime you see a bottoming tail. It doesn't work that way. I wish it did. It would have been easy. It would be easier. But again, that's what the TPM did for me. It made a huge difference. It opened my mind up. It taught me how to, again, put multiple things together. And if the picture looks good, given A, B, and C, then go for it. Then you can go for it. But you can't just do it based on a single candle formation. You see what I mean?
Yeah, okay, so what's your favorite part about teaching TPM? Like, what do people really get out of this special weekend with you?
My favorite part is I don't know what my favorite. I love this stuff. I just love it. The whole thing is my favorite part. I love the interaction with the students because it's going to be live. I love when I see aha moments, epiphanies. I love all of that. But I'm like, I love trading. I'm passionate about it, and I also think teaching is my calling. So I love teaching the stuff that made me who I am as a trader today.
Okay, so Sami, so what was your personal biggest aha moment when you took TPM?
Really, probably I mean, there were so many of them, Mike. It's hard to pinpoint just one or two, but one of the biggest things was the lesson that I shared with you guys today, which was, the difference between patterns and strategies. Trading strategies, not patterns, because patterns are a dime a dozen. In fact, they're free on Google. They don't work. And so again, figuring out a step-by-step process for every trade rather than just doing patterns, random patterns. That's one of the things that really opened my eyes and made me a much better trader.
So when the lucky people that take this class this weekend, what are they going to feel like Monday morning when the market opens?
Okay, this is are you do you have these questions written down? Because I don't know how you're coming up with them. They're amazing questions. I'm serious. So because this is an amazing question. I'm gonna tell you. I know you don't have them written down, but you're asking really good questions. This is what you will feel on Monday. You will feel like you're about to conquer the world, that you know so much now. And then if you try to push it on Monday, you will lose, because the knowledge is not yet part of your DNA. You need to practice slowly until it all clicks. So on Monday morning, most people will probably, if they try it, but I will say that I'll emphasize that on the weekend during the class, is that you think now I know, and you do know, but you know it from a conceptual point of view. You don't yet know it at a deep level. So on Monday morning, you'll feel ecstatic and you might push the button too much. So that's not what you want, but you will feel like the world's, something got lifted off your shoulders. You feel free. You'll feel like you understand what's happening, but you don't want to push it too much either on Monday.
Okay, so here's a good question from Leonard. So how many students would you say you have taught over the years? I'm going to guess it's probably over 3,000. What would you say, Sami? How many people have you taught?
It depends. How many people have I taught the TPM class? I mean, officially, I don't know. It would be probably in the hundreds. How many people have come through my program and now they're doing their own rooms, or they're running their own educational firm because they're really that good? In the thousands. So it depends what, like, exactly, but in the thousands over the years, in the thousands.
Yeah, and many of these students have been with Sami for years. They've been in the room with him, they've been in his newsletter, they've been with him for years. Okay, so here's a great question from Jose. What preparation should people do before Monday? I mean, sorry, before Saturday when the class starts.
I will tell you what preparation. Just an open mind. Just allow me to teach you something that's logical. I want you to question everything that I teach you. I don't want you to believe anything that I teach you because I'm teaching you, because you know me and whatever, you respect me or whatever. I want you to question everything and just come with an open mind, and I will teach you something that's logical, that you will understand right away. That's very simple, but also very powerful. So just an open mind. That's all you need.
Okay, here's a good question from Jay. Can this be used for futures?
Yes, it can. Any tradable instrument in an open market, this can be used for.
Okay, and Les asks, what if I can't make it Saturday? So Les, so anybody that's been interested in, so here's a little bit of a hack where the people at T3 Live are going to be annoyed at me. So the home study for trading the Pristine method is $795. So you can sort of cheat and take this for $495, because even if you can't make it live, you still get the recording. So you're getting the education no matter what. And just so you know, we're not BSing you. Like I'm going to show you the normal TPM checkout. You could see it's $795. So basically you can sort of steal the education for the same, so for $495. So you don't have to make it live. In fact, I'm sure some of you will buy just knowing you'll do the home study. So if you can't make it Saturday, this is still the best possible deal on TPM, whether you can make it on Saturday or not, because this is lower priced than the home study. So this is an absolutely amazing deal. So Les, thank you. We hope you sign up. Um, so Leonard is asking when the recording will be available. It'll be available as soon as possible. I assume we're going to wrap up this event within 5 or 10 minutes, and we will send it out to you as soon as possible. So Sami, we have a question from Mahmoud who's asking, does this work for day traders? I think it's an obvious question, but let's just be clear. Does this work for day trading?
Yes, sir, it does. That's the primary thing that I'll be teaching, but it also applies to swing trading and long-term trading, but it's primarily for day trading.
Okay, so if you guys want the ultimate day trading education, again, t3live.com/tpm, t3live.com/tpm, 50% off tonight only. So you absolutely want to get in. And yes, Mahmoud, again, this works for futures. So absolutely, we hope you guys sign up tonight so you can be with Sami on Saturday. So what other questions do you guys have about the course? Because we want to make sure everybody gets every piece of information they need before Saturday. And again, if you can't make it live, this is still less expensive than the regular TPM home study. So this is the best deal. This is one of the best deals we've ever had on any education. So we hope you'll sign up. Let me see. We got another question on futures. Yes, you can use this for futures. Anything with a price. So Sami, I want to talk about this a little bit from the student's point of view. Like, what do people tend to be surprised about once they're actually in learning with you? What kind of really gets them excited?
I think the detail. I mean, I think that most people think that, that they can read the chart, until I show them how to really read the chart and how to put together various things all at once. So I think that was like, for me at least, that was the most surprising thing. That, oh wow, I thought this was bullish, or I thought this was really bearish, and then you realize, no, it isn't. It's not what you think it is. And yeah, so that's, I think, probably the number one thing. And then of course the patterns are awesome. I mean, you learn some amazing, incredible patterns that I truly, 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 truly do every single, like, play these patterns every single day. It's the only patterns that I take. I don't teach you anything that I don't do myself. So the patterns are awesome. The amplifiers, the things that make the pattern even more powerful, more reliable, are amazing. I mean, it's just, there's so many different things. Some people love the climactic strategy. I don't know why. Some people just, that's the only thing they will do, is the reversal plays when the stock is falling apart. Like, remember Tesla a couple months ago? It's up over 100K for me, just FYI, because it went climactic, and I'm keeping it long term. I know the market doesn't look too good right now, but I'm just keeping it long term unless it stops out. So how did I enter? How did I do it? How did I take advantage of it? Well, because I know how to read charts, and it was going climactic. So some people, I have even people in the room with me. In fact, I have at least one person in the room that has been with me ever since I started. In fact, she started at the same time. In fact, maybe like a couple months before I did, and she's been with me since then. And she only plays climactic. Some of you know her. She's quiet, but the only thing she does, the only strategy that she does, are climactic buy setups and climactic sell setups. So it depends what you naturally gravitate towards, but it's actually important to pay attention and figure out what it is that you really gravitate towards, because you're not supposed to be doing everything. You're supposed to, like, pick your favorite stuff. Everything works, but you just need to focus most of your time and energy around certain patterns that you really naturally gravitate towards. So it'll be really nice to see what everybody actually ends up liking. I'll be sure to ask that question at the end of day one, at the end of day two, to see what everybody really liked, because there's just so many things that are like pure magic, that are eye-opening, that are just awesome, that are like, I love it. I love this stuff. 15 years later, you can feel the passion in my voice. And 15 years later, and I still am just as passionate about it as I was when I was actually a student. So we'll see what everybody likes, but I'll be sure to ask for sure.
Okay, so I think an obvious question a couple of people asked, like, what if I don't have a lot of experience? Like, can I still make TPM work for me?
You don't need any experience. In fact, that's what killed me when I started out, when I was starting out, because I thought I knew what I was doing. I thought I had experience by reading some books on trading, really like popular books, and that set me back. It didn't really help me at all. It's only when I took the TPM class that my eyes were opened. And then don't forget the TPM class, we start off with the basic foundational stuff, and we build on it. Every section builds on the previous section. So you don't need any experience. And if you say, well, I'm not ready to start right now, to start trading right now, don't worry about it. Take advantage of the deal, join me this weekend, and then you will start whenever you start. It doesn't, it doesn't matter. But this is an amazing deal. I'm really excited and looking forward to teaching the class. Join me, take it, and then you'll apply it on your own pace, on your own time, at your own pace, on your own time.
Yeah, and I'll just remind everybody of how easy it is to lose $495 on one bad trade, if not a lot more. So, there's two kinds of tuition in this world. It's either you pay for school or classes, you pay for education, or you pay to learn the hard way. Now, I know I've lost a lot more than $495 doing bad things, doing things I wasn't supposed to because I wasn't educated. So if you think about it in that respect, this could be a foundation for your entire trading future. So $495, an amazing deal, because if it stops you from making just one big mistake and breaking one bad habit, this is 1000% worth it. So I'm going to take a final round of questions. So Dan is asking, so Sami, outside of moving averages, do you use any indicators?
Great question, because when I started off, I was using stochastics, I was using RSI, I was using the MACD indicator, the MACD indicator, any indicator that you can think of, Bollinger Bands, anything indicate, I was using it. And when I learned the Pristine method, everything went away. I didn't need any of that rubbish, any of that garbage. So the only indicators that I use are moving averages, and I use them because they're powerful tools that kind of simplify the trend and point the direction for you up or down or sideways. So it's just a simple, powerful tool, moving averages, and volume. And volume just shows you, I don't even need volume. I only need it just under two conditions, two scenarios. One is when I get a spike in volume at the beginning of a move, and the other use for volume, which is much more important, is when I'm suspecting it's the end of the move and I start to see the volume spike. Look at, for example, Tesla, or look at some of the stocks that collapsed, and you will see that they all had a spike in volume, which was basically very telling that the stock was at or near a bottom. So, so I just use volume and moving averages and nothing else. And it's not like I teach you just moving averages and volume, and in the on my machine I actually do use stochastics and Bollinger Bands and all the other stuff. I don't. It's true. I truly only use moving averages and volume and nothing else.
Okay. Okay. Jose asks, do you cover level 2 in this class?
It's not part of the class, but I'll be sure to go over it.
Yeah, so Jose, if you join, Sami will Sami's an amazing teacher. He will find a way to squeeze it in. All right, so Leonard has a good question. Any trading psychology in the course?
The whole class is about trading psychology. Remember the section that I went over about candlesticks? What do you think I was teaching you? It's the psychology of traders involved in each candle. So the whole class is about trading psychology. Now you might say, no, I want to learn more about my psychology. You will yourself teach yourself about your own psychology, because now once you take the TPM class, you'll understand trader psychology, and you're a trader. You'll understand your own psychology. The whole class truly is about trading psychology. You just need to apply it to your own personal situation, to your own self.
Yeah, and I'll add to that if you're having issues with confidence and if you're feeling self-doubt, the best way to build that up is to know what you're doing, to feel like you have control over your trading. And that's true of anything in life. If you want to fix your psychology, you need to learn what you're doing, which is the whole point of this course. Okay, so Jay asks, do you use this method for earnings plays in strategic swing trader?
Yes, I use the same. So check it out. The TPM class teaches you how to read price action and charts objectively. If I can't without the TPM, I wouldn't be able to trade any strategy at all. I wouldn't be able to, you see what I mean? I wouldn't be able to use the charts for playing earnings or playing gaps or doing reversal plays or anything at all, swing trading. So I don't necessarily specifically teach the earnings strategy in this class. I'm happy to cover it quickly also. I would be happy to cover it if you decide to join and you want me to go over it. I would be happy to do it at the end. But But once you learn once you're able to read the chart objectively and be able to read it on multiple time frames, you will, you'll figure out whatever you need to figure out. Like you'll figure out how to pick the plays before they report earnings, or how to stay, which ones to stay away from. You see what I mean? So, but it's not like, there are certain things that I do that I may not be able to cover in the class. But the thing is, what you will learn is the system. And you can now, once you have the system, then you can apply it to various things. You can apply it to futures, you can apply it to stocks, you can apply it to scalping, to playing swing trading, day trading. You see what I mean? So that's the thing. But I'm not going to pretend like, oh, I'm going to teach you 15 years worth of experience in 2 days, in 2 short days. No, I'm not going to. That's not the point. The point is I'm going to teach you the system, and then over time you will learn how to apply it to whatever strategy or whatever thing that you want to do. And if you ask me, if you have specific questions, oh, I will be happy to cover them. If it's not possible, then I'll probably be able to give you a free video that you can watch on that specific strategy, if it's like a too long of a discussion or whatever. You see what I mean? So I'll do whatever I can to help you learn this and become successful, because I know it's everybody's dream. I'm like, it makes me truly happy to help you achieve your dreams, because it's just like, what else more meaningful in my life could I do than to help other people achieve their dreams? That's like the number one thing, right? So if it's something I can do, I'll be happy to, to teach it to you.
Okay, I think that's a good note for us to end on. So again, this is a unique opportunity to learn live with a top professional and save 50%. And it's cheaper than the recorded version. So this is an amazing deal. Guys, again, 50% off. Expires tonight. Go to t3live.com/tpm. I'm going to shoot the link out one more time, t3live.com/tpm. We saw a whole bunch of people signed up. We're really excited to see you Saturday. Guys, we think this is going to change everything for you. And Sami, as always, it's great working with you. Thanks for coming out tonight.
Thank you so much. Thanks so much, everyone.